Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Blackrock Silver. Blackrock Silver is traded on the TSX.V under the ticker BRC and on the OTCQX under the ticker BKRRF. I'm joined today with the president and CEO of Blackrock Silver, Andrew Pollard. And Andrew, it's always great getting you on the show for an update on the company. You've had a couple press releases come out since we've chatted last, and I want to dig into it, but first and foremost, let's get into the updated mineral resource estimate for Tonopah West. This is your project in Nevada. You put this out to the marketplace on the 8th of September, and this is really the first of two resource updates you're going to put out. This one was based on your M&I drilling, your measured and indicated, trying to show up more high confidence ounces and some continuity in the deposit area for the upcoming economic studies. It does not include, however, the expansionary drilling that you've been doing most of this year. So I guess just from a high level, walk us through this first of two resource updates coming out to the marketplace.
Thanks, Shad. It's great to be back with you. So the resource that we put out in early September is the first of a double header of resources that we've got coming down the chute here in fairly quick succession. So this first resource was focused on, I guess, showing the market that our ounces really were as good as they looked. Because, even I'm thinking last year or two since I've been on your show, you've been wondering why the heck we've been trading at a discount to other high grade peers on an EV ounce in the ground basis, despite us being, the highest grade story out there at the moment. And really, it was just because, I'd always said that it was just based off skepticism. Up until September, all of our ounces were 100% on an inferred basis. So what we wanted to do was show the market that we can meaningfully convert our ounces and do what we set out to do. So really the big idea behind this resource that we released earlier in September was we wanted to show the market that we could drill out the first 2 to 3 years of the conceptual production that was laid out in our PEA that was released in 2024. Now, that PEA was based on $23 silver and $1,900 gold, and it laid out a 2.3-year payback period. So, what we wanted to do with this resource was effectively de risk the decision to ultimately develop this thing and drill through that payback period. So, we've been guiding, delivering somewhere between 1 million to 1.5 million tons of indicated, and we ended up delivering 1.33 million tons, which represents a little over 2.5 years of that initial production. So we achieved exactly what we set out to do. And the best part was we're able to maintain that same grade profile, that same standout grade profile that we've seen with our inferred drilling to date as well. So that's obviously pacified the market quite a bit. It was a little bit of a sell the news reaction on the day it was released, but 3 or 4 days later, we gapped up, I think 20 to 25% higher on that. And we've been trading at brand new levels here ever since. But really, a few key distinctions that I can make with the resource. What's nice about our project is our silver equivalents are just silver and gold. And, for this resource, we used 180 gram per ton cutoff grade. And when you look at just the silver grade at 220 grams per ton on the indicated, or just the gold grade at 2.5 grams gold, both of those independently are well above the cutoff grade, meaning, one of these commodities more than pays the bills and you get a free ride or effectively negative cash costs on the other, which is really, really nice. So with this resource out, one of the fortunate things that we'd set out to do was have it ready for delivery prior to the Beaver Creek conference, which is where I think I last saw you in person. And that represented a great launching off point for us because we were able to show this resource to a lot of the corporates that were attending there who, we really only get to sit down with many times just once a year at this event. And the response we had from them was very, very positive. So, obviously the market's in a very different place now. You've seen a lot of the large single asset producers all been gobbled up. And now I think stories like ours, developers with good grades, very robust economics, and in a good jurisdiction are starting to capture a fair bit of attention that I think was missing from the market a few years ago.
Oh, for sure, Andrew. Yeah, there's a lot more interest in the sector in general. There's more money coming into the sector. There's companies that are raising more money we've ever seen before, but valuations are starting to move. And part of the advantage you have with ounces in the ground already, and as you say, this is not mostly base metals with a little peppering of silver. This is silver and gold, straightforward precious metals. And like you say, each of the metals kind of carries the other, whichever way you want to factor it. You've got the torque to rising metals prices of both precious metals that a lot of companies would be envious of. So just to wrap up the resource that you put out in September, the M&I update, about 108 million ounces all in between the indicated and inferred, 21 million being in the indicated and about 87 million being in the inferred. So a solid resource to build on, but you're not just going to re-rate higher based on more interest in the sector and rising metals prices. You've also done all the expansionary drilling that's going to lead to yet another resource update the beginning of next year, and that's going to include the Northwest Step Out, the Eastern Expansion Area off DPV South, the Ohio Mine area you drilled, so all these other areas you've been expanding into. Talk to us about the upcoming expanded resource that you hope to put out the beginning of next year.
Yeah, well, we've had a very busy summer on the drills. Earlier in the year, we announced the results from a scout drilling campaign. I think we started that in January when we had the RC rig with not much to do. And we successfully stepped out 1.2 kilometers from, I guess, the eastern margin of our DPB resource area all the way to the edge of our property. And we connected on 7 drill holes or 7 intercepts that returned some really good high grades. We hit one zone of 4 meters of 900 grams per ton silver equivalent. And what we've done since, I guess, the last week of July was we've gone back. Initially, we set out to do 15 core holes through that exact same zone. So testing some very shallow intercepts we had for continuity across that entire 1.2 kilometer system. And we actually expanded that. So we just wrapped up drilling last week, but we've completed 25 drill holes in that same area, all of which have assays pending now. And then, of course, earlier in the year, we successfully stepped out 500 meters to the northwest from the western margin of the DPB area, which is really where our mine begins. So both this northwest step out and the eastern expansion step outs bolt right onto the existing mine plan. What's very exciting about this eastern zone is that it's some of the shallowest drilling that we've ever done on the property, which is why we're able to get so much drilling for, I guess, such low prices. We expanded this program without actually having to raise the budget. It was just so quick and easy on the drills. So we've gotten a lot to look forward to, especially with silver breaking out. I mean, our stock has run nicely in September on the back of that M&I resource. I'm almost a little surprised at how well received it was in the sense that, you're just sort of showing the same ounces, but it shows you just how much, I guess, skepticism there was in our ability to convert it. So, we traded something like 96 million shares, just a little hair underneath 96 million shares in the month of September, which blows any previous month's volume out of the water, probably by a factor of 2. But, the exciting part for me is now that we've gotten a new sense of confidence from a market perspective in our ounces, now we're focused on adding ounces. And, the next couple of months, we're going to have a lot of news coming down the pipe. We'll have a new resource coming out in Q1. And then what we're going to be doing is updating our PEA with both our M&I conversion resource, which has de-risked those first 2.5 to 3 years of production. And then hopefully we can add some mine life on the back end. So a lot to look forward to here in the short term.
Well, and Andrew, in addition to expanding the resource and having that upcoming resource come out to the market the beginning of next year, like you say, you're going to be putting on this PEA. But I think the other thing that's interesting is you're going to have a higher average grade profile just because of some of these other expansion hits are continuing to find even higher grade than you already had. And you've already risen at some in just this last resource. But in addition to all that, we have a lot higher metals prices. So I guess when you're working towards this PEA, you have to use a certain metal assumption that's conservative, and I think everybody knows and appreciates that, a consensus price target. So maybe share the metal prices that you're going to use for the consensus pricing, but also let's deal in the real here. A lot of people are looking at where silver and where gold prices are today, and that's where the torque comes from, is the potential to re-rate beyond what's just going to show, even in that economic study you haven't even put out yet. So talk to us about the grade profile raising, but also talk to us about the metals assumptions that you're going to use in these economic studies.
Well, yeah, no, you've made a very good point. Just looking back to last year for a PEA that we released in September of 24, the metals prices we used were effectively half of what they are today. We used $23 silver and $1,900 gold, and here we are, silver's for over 46 bucks and gold's over 3,800. So it's amazing how far the market has come. Typically, when you're doing economic studies, we'd use the 3-year prevailing average. So naturally, it all depends on how things finish towards the end of this year and early into next. But we typically settle on a 3-year prevailing average, which will naturally be quite a bit cheaper than market prices today or wherever they are in Q1 or early Q2 of next year once the PEA is put together. That said, I think for our last PEA, we didn't expect silver and gold to run as much as they did. So we used an upside case there, which was, I think, 2760 silver and 2280 gold. And, even by the time that came out, it was already sort of stale because those prices had moved so far beyond there that it wasn't really useful. So I think what we'll try and do for this next one is, we'll do an upside case, but we'll also look at what the economics would look like at current prices too. Obviously not for the base case, but just to be helpful to show people just how robust this could be in a more current market reality.
Yeah, I think that's going to be very helpful because we've made the point on our show many times, especially when we're talking with other newsletter writers or fund managers, that a lot of companies' upside case on their slide deck is actually a downside case right now because
Oh yeah.
the metals prices have moved so high. So it'll be nice to see the sensitivities table, obviously, with the conservative metals price assumption as the core of the economic study. And so, in addition to all the expiration that you have to put into that resource, you're still in the good position to do more drilling in the year to come because you've also raised some money through the exercise of warrants. So let's also discuss that as you've been doing all this work, usually companies are depleting their treasury. Your treasury has actually been filling up as a result of the price action in the marketplace.
Yeah, well, that's a very unique experience for me as an exploration company. Obviously, that doesn't typically generate revenue, but in this case, we've seen just an absolute torrent of warrants come in the door, really since mid-July. So, just on, I guess it was Monday afternoon of this week, the 29th, we released our Q3 financials, which were up to July 31st. And at that time, it was showing that we had something in the order of $7.5 million in the treasury. But if you scroll all the way down to the very, very, very last page of the financials, you'll see my favorite section, and that's called subsequent events. And in the subsequent events section, you'll see that another $5.5 million of warrants have come in the door. This is very good in the sense that obviously it's good to have the money come in, but it's chewing through any sort of overhang in a very orderly fashion. I mean, what we've been absolutely running here, but it's the volume that we've been seeing, which has been truly off the charts, and it's helped us chew through this overhang in a very orderly manner. The warrants that we do have remaining, I think, we've got something like $19 million worth or so of in the money warrants. But what's nice about them is it's not all coming in one tranche. There's 4 different closings or 4 different tranches that expire at different points throughout next year and early into 2027. So, I'm a little surprised at the extent to which we've seen a lot of these early exercises come in. But, what we chew through now means we don't have to chew through them later. And obviously, the more money we have in the bank, the better position it puts us in with respect to our needs to finance moving forward. Drilling wrapped up a week ago or so, which means, our burn rate absolutely plummets. So, every day we're having money come in and we're not spending it. And all the while, we've got nothing but catalysts lined up over the next 3 months or so with 25 drill holes in the lab, a new resource in early Q1, a new PEA, and then we'll have more movement on the permitting angle as well. So this is a really, really good position we're in as a company. And I think the project's really, coming into its own, right? As people are starting to pay attention to silver again. I mean, when you look at American silver stories, there's really nothing anything like this. When you look at the developer space, our grade profile, at over a half kilogram on a block diluted grade, or the PEA, for example, had a head grade laid out of 570 grams per ton. Well, that's 55% higher head grade than the next closest developer in the silver business globally. So, obviously America is not a bad place to be either right now in terms of aggressively moving projects forward through towards development and into production. And yeah, it seems like the stars are aligning right at the very time we're ready to really sort of pull the trigger on things.
Well, Andrew, I think that's a perfect place to wrap it up for today. And in full disclosure, I'm a shareholder of BlackRock Silver, so what I'm about to say is biased in that sense. But I am not surprised, actually, Andrew, that your warrants are getting exercised because of the points we just laid out. Not only is this in the U.S., which is a desirable jurisdiction because of all of the focus on mineral development and expediting permitting timelines and all of that focus. I know some of that it doesn't even apply to you because you have the permitting advantage based on the land you're on, but also the rising silver price provides a lot of torque to the resources that people are aware of just as they are today. But I think a lot of people can do the math and realize your resource is going to get larger when you put out the updated one the beginning of next year, and your economics are going to look a lot better because of how low the metals price assumptions were in the last one, just based on the smaller resources that was in the prior PEA. So when you stack up all those catalysts together of jurisdiction, precious metals, gold and silver combination, the updated resource, a growing resource that's coming out, more drill holes still to report, and an economic study that's going to have more robust economics with higher grades on average on the project, there's a lot of torque in BlackRock Silver, and I think there's a logical reason for it. So, anyways, for those of you listening in, if you want to follow along with all this news that's still on tap and all these catalysts, definitely click on the link below in the show notes. It takes you over to the BlackRock Silver website, straight to their news section, where you can follow along and have those updates hit your email inbox, or just follow along with the news as it drops. And Andrew, I'm sure we'll be talking again in the months to come as all these catalysts come in. Keep us posted. And as always, looking forward to our next conversation.
Thank you very much.